Hello guys.
In this lesson I want to show you the situations when we have two clusters on one currency pair. It's a normal situation and it happens often. It's open the CAD-yen currency pair on H4 time frame. We will do a more detailed analysis of this last dropping leg, but before that it's always better to look at the larger picture on a larger time frame. The movement of this currency pair is in a downtrend. We will start the Fibonacci from the top to the bottom. All levels of the Fibonacci retracement are above the current price and they represent resistance. Since I want to focus only on this last move, we will mark the level 23.6 and of course 38.2. Okay, I'll delete the Fibonacci. We will switch to the H1 time frame and trying to find a potential trade setup. Of course, we take Fibonacci again. What do we see now? The first level of 23.6 is breached, meaning you have to forget about it. It's no longer valid. The price responded and declined from level 38.2. It's too late for us to open sell now at that level, because if the price starts to rise again, there is a big chance that this level will be breached. The next important level is 50%. What is more important to us is that this level is very close to the resistance that we marked on the H4 time frame. These two levels are only 6 pips away from each other and we have received the first potential zone of resistance. I will mark this level. That zone now represents the potential trade setup. The next level is 61.8, the most important level of retracement, and we'll mark it as well. For example, with red color. Okay, let's go and use Fibonacci again. We'll skip this top because it's too close to the previous one, but we will use this one. Level 50 is breached. The level of 61.8 is important, but it is pointless to expand the market zone. We will leave as it is and maybe use this level later. The last significant retracement of this movement is 78.6 and we'll mark it. This level is close to level 61.8 that we have previously marked, and now we got another potential zone of resistance. Okay, we are finished with the retracement levels. Let's use the Fibonacci extensions. We will only use the later swing to see if maybe one of the levels of the Fibonacci extensions match with these zones. So we start the Fibonacci from top to the bottom of this movement. The first 127.2 extension level is located directly at the beginning of the first resistance zones, while the level 161.8 is slightly above the second resistance zone. Okay, we ended up with Fibonacci on this currency pair, and what did we get after this analysis? We got two Fibonacci clusters. Okay, let us repeat what the Fibonacci cluster is. It's a narrow zone on the graphic that contains several Fibonacci levels, and I'm looking for at least 3, which we get by running several Fibonaccis on different time frames or movements. So we use as many Fibonaccis as possible, running from different points, and if there are several levels in one narrow zone, we have a Fibonacci cluster and a good potential zone for opening a trade. The analysis of this currency pair is not finished. We have two potential trade setups. We need to choose which one is better. And with the help of other very simple skills from the technical analysis, I will show you why this first zone of the Fibonacci cluster is better for trading than the second. I will explain it to you in the next lesson. See you!